Welcome to the final in the series, Preparing Your Data for an Affirmative Action Plan. We're going to be talking about compensation data today. My name is Carla Irwin. I'm the president of Carla Irwin Associates, a full-service consulting firm helping federal contractors with their affirmative action obligations. And with me, I also have Stephanie Thomas. Stephanie Thomas is the founder and CEO of Thomas Econometrics.
Welcome to the webinar. I'm happy to be here for the last installment of our Back to Basics series.
So let's get started. Okay, so we've been doing this Getting Back to Basics series, and this is really about just what we see as the basics of an affirmative action plan is the data. So we've gone through all the different types of sets of data that you need to do your affirmative action plan, and we're kind of finishing it up with compensation. And so we really just want to talk about how to clean data, how to validate data, things like that.
And before we get started today, just a quick reminder that we are planning a second series of webinars on the OFCCP scheduling letter preparedness, what the scheduling letter is going to look like and what you need to do to be prepared. The OFCCP hasn't finalized that scheduling letter yet, so we haven't finalized the webinar series talking about those changes. But as soon as they finalize it and we have a schedule in place, that schedule will be posted on my website, on Carla's website, and we're also going to send an email out to all the participants letting them know what the scheduling of those second series webinars will be. We also just want to remind you that nothing we're telling you today should be construed as legal advice. We're not giving you any kind of legal advice. If you have questions about the legal perspectives, you really should consult with your employment attorney. And as with everything we've talked about in this webinar, attorney-client privilege and confidentiality is a big issue, but it's incredibly important when it comes to compensation. So when you're thinking about these compensation issues, really be cognizant of the fact that it's confidential data, it's personally identifiable information, and you really want to take advantage of that attorney-client privilege by having an employment attorney involved. And so today we're going to talk about the data requirements for the compensation portion of the AAP. We'll go over the common missing data points and what effects those missing data points can have on your AAP. And we'll give you our best practices, suggestions for data scrubbing and validation.
Let's start with required data. Like all of the other data that we've been talking about, compensation data should be kind of that personal level data, that employee level data. And I'll make a little point about the current scheduling letter and the new scheduling letter with regard to this. The current scheduling letter that's valid, the information that you send, it gets rolled up either by job title or job group or salary grade. It actually, the scheduling letter allows you to send it however you'd want. The new scheduling letter is going to require that you send it on that personal level, so kind of on that employee level. So that's really important. And so I'm going to talk a little bit about in the required data. I will try and point out kind of the current scheduling letter issues and the new scheduling letter issues. But again, watch for our next in the series in terms of the new scheduling letter. Something interesting. So full-time, part-time, contract, per diem, day labor, and temporary. So most employers are putting full-time, probably part-time, in their AAPs. A lot of people don't put contract, per diem, day labor, or temporary. Just there's been a lot of discussion about what's the definition of an employee with regard to affirmative action plans. So for the most part, when people are submitting your compensation for a scheduling letter or even reviewing their compensation data with regard to their AAP, a lot of times they're only redoing it for full-time, part-time. So again, this is another old and new scheduling letter. With the proposed new scheduling letter, the OFCCP is actually asking for all of these types of employees. This is really one of the issues that the contractors made note about to the OFCCP, that is this really expanding the definition of employee. So be aware of that and make sure that you can start getting these folks into your compensation data that you submit. That doesn't necessarily mean that you'll put them in your AAP, but that you may have to submit compensation data for them. Fields that you're going to want to have when you are reviewing compensation in the regular process of your AAP, and also when it comes to reviewing it for the desk audit when you receive the scheduling letter. Unique identifiers. We've talked about this. I prefer employee number. That also can mean employee name. Just never use Social Security number. That's a very confidential piece of information. From a consultant perspective, it's not something that I need. If you don't have anything other than Social Security number and you don't have employee ID numbers, then name will be good. The demographic information, as always, we need to know their race, gender, and ethnicity, job title, full-time, part-time employment status, so that needs to be pulled into there. EEO1 group and AA job group, location, hire date, rehire dates, and I'm really going to highlight on rehire dates, especially if you are an employer that has a lot of turnover and from a seasonal perspective, so you got to do a lot of layoffs and then maybe recalls. It could be important to know the last time that the person was hired with regard to how they're being paid. And then their salary, pay rate, hours worked. Again, the salary, pay rate, hours worked, not necessarily something that you submit initially with the desk audit currently, and even for the future, in the new scheduling letter, it's not something that you have to initially send, but it has been something that the OFCCP asked for very quickly after the desk audit letter, and that you will probably be asked in the future for also. So having that is very important. In addition, it really helps you analyze, if you're not doing it for an audit, it really helps you analyze it on an annual basis so that you can look at it different ways, especially if you're pulling kind of the salary information. Full-time, part-time, and the part-time is just their part-time salary, and you need to make some adjustments for hours worked and pay rate.
Now, in addition to the required data fields that Carla just talked about, there's some additional information that you should capture when you're preparing this data. And that information really centers around the factors that determine each employee's compensation. Now, depending on your particular structure and how your pay plans work, there's going to be different factors that determine compensation. So you really need to look at your compensation plan descriptions and find out how people are paid and capture the relevant information. But what I'm going to do is just give you a rundown of some common factors that a lot of plans use to determine compensation. And the first one is some kind of a measure of seniority or time in job or time in grade. If you have a grade step system, time and grade can be really useful in differentiating, who should be at the top of the grade range and who should be at the bottom based on how long they've been in the grade. Seniority or time and job can go a long way towards explaining why, for instance, two employees who are in the same job title in the same AAP group have, different compensation rates. One may be a relatively new hire. Another one may be an employee that has longer longevity and has gotten, cost of living and merit increases for a number of years. So seniority, time and job, or time and grade typically do influence someone's compensation. The other kind of information that you want to capture is prior relevant job experience. Depending on, again, how your particular compensation plan works, some plans factor in relevant prior experience and perhaps even salary on previous jobs. So again, prior relevant experience can be something that helps you explain differences between two employees that on the surface would look to be identical, but in fact have very different compensations. So prior relevant experience is important. Along with that are any kind of degrees, certifications, licenses, educational history. For some jobs, certifications and licenses really aren't that important. If we're talking about sales positions, for instance, it doesn't really matter if the salesperson has a CPA license. If we're talking about the accounting department, then a CPA certification can make a difference in terms of compensation. So if you have that information about education, ultimate degrees, certifications, and licenses, pull that along with you when you're creating this compensation file. Shift differentials and geographic adjustments can also be important. If you have multiple shifts, if you have a first and a second shift or a first, second, and third shift, sometimes those overnight shifts are paid a premium to sort of induce people to work those. So if there's shift differentials going on, you need to be sure to capture that. If there are geographic adjustments or locality adjustments, people in metropolitan areas are paid more because of cost of living, or the opposite could also be true. We pay people in rural areas a little bit more to convince them to move out to that area. Any kind of those adjustments you want to be sure to pull along and capture in this compensation file as well. Department and function. Now, some of this may overlap with what you're doing in terms of the AAP group, but depending on the particular department or the function in which the employee works, there may be differences in compensation. And really what we're trying to do by capturing all this expanded information is to explain the differences in compensation between two employees that appear to be similar. So even though they have the same job title, if they're working in a different department or a different division, that may be a reasonable, non-discriminatory explanation for why their compensation levels are different. It's also a good idea to bring along the exempt and non-exempt classification. Proper classification is, as we've mentioned before, a really, really big issue right now with the Department of Labor and the Wage and Hour Division. The IRS is looking closely at classification issues. So even if it's not an employee versus independent contractor question, there still can be a question about exempt versus non-exempt. So bring along that classification. And it's also going to be a good way for you to internally validate your data. If you have an exempt employee who's showing overtime hours and overtime pay, that should signal that something's wrong. So bring that classification information along with you. And again, you're going to want to capture the grade, the band, or the salary range. You want to have general information about what the pay spread looks like for that particular person and others in that particular job. You also want to capture any information about compensation other than salary or hourly rates, things like bonus payments, incentives, special, spot bonuses, any kind of additional compensation that's paid. You want to be sure to carry that along and include it in the compensation file. So you've got the salary, you've got the bonus, the overtime, the incentive, all those different pieces. And that's going to give you the flexibility to really look at different parts of compensation. You can look at it as total compensation, or you can look at it individually. And it's easier just to pull that along with you when you're creating that file rather than to have to go back and extract it and try to mesh it in with what you already have. So bring it along when you make that first file.
Yeah, and a couple points about some of this. I know that we've talked about in some of the other webinars about, having everything as electronic as possible, having it in your HRIS system or something like that. And this is the same way. Whatever you can get into your HRIS system is best. Because in the event of litigation, in the event of an audit, you're going to be hand-pulling some of this information because it is going to be the justification for the reasons for the differences in pay. So it's one of those things like, it's the end of the year, thinking about what projects you might want to start for next year, and in terms of priority, I would suggest having this be one of the projects for next year. Just that, what can we get into our HRIS system so that in the event we have to justify pay, or we need to do a regression analysis, or there's litigation, whatever the case may be, that this is information that is easily pulled and doesn't take a lot of manpower once we're kind of under the gun for an audit or litigation.
So let's talk about some of the required documentation. And basically the required documentation, the way I see it, falls into two different categories. And the first category is payroll information. And payroll information is pay stubs, payroll data, information about the regular rate of pay, the number of hours worked per week, overtime hours. Again, all those different components of the pay, the regular rate, the overtime rate, commissions, bonuses, etc. it's what you would typically think of as payroll information. It's what's going to be reflected on somebody's paycheck, their pay stub. It's going to be the kind of information that's reflected on a year-end W-2 statement, for instance. So you want to make sure that you have all that payroll information. The second kind of documentation is a little bit different, and I like to refer to this as the compensation decision documentation. And what we're talking about here are things that help you decide what somebody's compensation is going to be. When you do your year-end reviews and you decide that somebody's going to get a 3% increase or a $2,500 bump up, those decisions aren't made arbitrarily. They're based on pieces of information that you've assembled. And that information can come from external benchmarks. Maybe you use salary surveys or industry statistics in deciding what your pay ranges are going to be, what kind of merit increases or cost of living adjustments you're going to give. You also rely on what I call internal benchmarks, and those are things like your salary plan descriptions, your midpoints, your pay ranges for grades or bands. So all that information about the internal and the external benchmarks, the information that you use to actually set someone's salary, you want to be sure that that's maintained. And again, electronic information is preferable with a lot of these things, with the salary surveys or industry statistics, even perhaps your salary plan description. It may not be possible to get that in an electronic form. If you don't have it electronically, that's okay, but make sure that you preserve a hard copy of that somewhere so you can go back to it when you need it. You also want to keep copies of performance reviews. And when I say performance reviews, obviously we want to keep signed copies of the completed reviews where the employee acknowledges that they've received the review, they understand it, they can make comments, etc. But it's really more than just that signed completed review. You want to make sure that you maintain the documentation about the criteria that you used in the review process, and you want to make sure that those criteria are validated before you use them, and you want to keep a record of that validation process. So if you validated it internally, you want to keep a record of what you did to validate it. If you had your criteria validated externally by a third-party vendor, you want to be sure that you have the information that that third party provided you, whether it's a report or however they communicated that to you. So you really want to keep documentation about all aspects of the performance review. Signed copies of the completed reviews, yes, but also the criteria that are contained within that performance review. You also want to keep information about any special circumstances that affect a given employee. Sometimes we see employees have special circumstances. The most common one that I see is something called red circling. And just a quick explanation for those of you who don't know what red circling is, it basically happens where somebody is moved to a lower grade or a lower level position, but they don't receive a decrease in salary. So for instance, you may be transferred from Department A in grade 10 to Department B in grade 8, but you're going to keep your grade 10 salary. They're not going to reduce your pay. If you aren't able to identify those special circumstances and identify, for instance, people who were red circled, when you look at that data, if you were to do a regression analysis or if the OFCCP is looking at your compensation data, those people with special circumstances may stick out. And without knowing that they have special circumstances and without having documentation about those circumstances, it can look like you have an internal equity problem. So any employee that has a special circumstance, whether it's red circling or whatever kind of special circumstances might occur, you want to be sure that you have documentation of that so that you can identify those people and explain why their salary might appear to be out of line with other similarly situated employees. And finally, your compensation policies. This kind of goes back a little bit to the internal benchmarks with the salary plan descriptions and the midpoints and things. If you have compensation policies separate from those summary plan descriptions, you want to make sure that you keep copies of those so you can provide them to the OFCCP, you can provide them in litigation, you have them at your disposal if you need them.
Okay, so some common missing data points. So when I'm working with clients, what are some of the things that I see that can be an issue? And the first one is the correct hire date. And what I mean by that is that do you really know what date you're pulling into your report? So when you pull hire date, is it the first hire date they had? Is it the last hire date they had? Is it some sort of mix because you're bridging seniority, that kind of thing? So really understanding and knowing what hire date is in there and pulling as many as you have, is important. But that's one of the things that I ask the question of clients, okay, which hire date is it? A lot of them don't know. So if you're kind of pulling your reports internally and looking at them, it is important to know which hire date you have. Salary, grade, band, range. My point about this one is, if companies have them, then typically they give them. But I'm finding a lot of companies that don't have them, especially companies that are on the smaller side, 500 employees or less. A lot of them don't have a compensation structure set up, so they don't have a salary, grade, band, or range. And so one of the things that you need to think about and that I discuss with my clients is how do you determine pay? How do you set that up? Is it based on job title? What are those? So you really need to think about your structure for determining pay if you don't have those things. And if you don't, and your answer is we don't really have a structure, we ultimately just pay people what they ask for when they start, and then we give them merit increases going forward, it is something to think about maybe having some help either internally or externally creating some a compensation plan and structure for you. Especially for those of you who've been through an audit or litigation, you know that having structure is helpful. Full-time, part-time status, very important. And it's typically on the report, but it may not be correct. So what can happen with full-time, part-time status is someone moves back and forth full-time, part-time status based on seasonality or changes for them personally, and they're moving back and forth for whatever reason, and the system doesn't get updated. So sometimes it gets caught because it impacts pay, but if pay can be adjusted outside of having to adjust the full-time, part-time status, I do find that that's something that does end up being incorrect, probably about 30% of the time. Compensation documentation. While it's not a data point, it is really important to say, and I know Stephanie said this, keeping your current policies along with historical documentation. Your comp policies and how you decide to pay will be something that the OFCCP will ask for. You may need in the event of an audit to justify differences in pay. But I'm also talking about starting pay documentation. Offer letters, keeping those types of things. If there was any documentation in terms of the reasoning why you started someone at a certain rate, increase merit. Another thing is also merger and acquisition issues can come up when it comes in terms of compensation, because different companies pay their people different things, different companies title their people differently, and when you're kind of coming together in a merger and acquisition, especially if it's fresh the first few years, everybody hasn't been merged into one compensation plan or one titling structure, so that really can be the answer to why people that may be similarly situated are paid differently is due to a merger and acquisition, and that may be the justification and business reason that you give to the OFCCP or in litigation. So other comp factors. While it's not required at the desk audit stage, really now or in the future with the new one, really I've found when I'm working with a client and I find an issue and we just do a quick analysis based on hire date, when I go and ask those questions about how long have they been in this title, how long have they been in this grade, that's something that's really that is difficult, and it's a very manual process. So kind of that expanded information that Stephanie was talking about, I find that a lot of people definitely don't have in their HRIS systems, and even it's a little hard to pull. So just kind of worth noting that, really think about the expanded information that we talked about earlier and how to get it into your system.
And just one thing to sort of follow up on a point Carla made before we go on. With respect to historical information is playing a larger and larger role in what I'm seeing in terms of regulatory investigations and litigation. One of the big things that's happened in the last couple of years with compensation is the Ledbetter Fair Pay Act. And basically, under Ledbetter, we're not going to get into the whole legal discussion, but Ledbetter basically says that a plaintiff is allowed to challenge a compensation decision as being discriminatory every time a new paycheck or a new piece of compensation is paid. Now, what that really means is somebody can file a lawsuit today claiming that you discriminated against them on the basis of gender, race, age, disability status, what have you, 20 or 30 years ago. Most of us aren't going to be able to remember how we made those compensation decisions 3 years ago, 4 years ago. Some of us right now, coming up on the end of the year, we may not remember how we did it last year. So because we now have this expanded scope and these decisions from 20, 30, 40 years ago can now be challenged, it's essential that we maintain this historical information. And I think that, as we go forward, the role of that historical information is going to become even more important. So let's talk about some common data pitfalls. Common things that I see are, when I get the data file, I see a mixture of hourly rates and annual rates. And this really happens not only for the hourly people, the non-exempt people, but also with the exempt people. If you've got a mixture of hourly rates and annual rates, that information has to be reconciled before you can do anything with it. That's probably the number one pitfall that I see in files. Don't have a mixture of hourly rates and annual rates. Do them all in terms of hourly rates. Do them all in terms of annual rates or full-time equivalents. But make sure that whatever you're measuring, whether it's hours, annual rates, etc., make sure that you're consistent. For those of you who may have a multinational organization situation, if you're paying people in other countries, I sometimes see a mixture of U.S. dollars and other different types of currency. It's not that common, but it does happen. So if you're a multinational, be sure that not only you have your hourly and annual rates sorted out, be sure that all of those rates are reported in the same unit of currency. The next biggest pitfall is construction of similarly situated employee groupings. For those of you who have been working in the contracting community for a while, you're probably going to be familiar with the term similarly situated employee grouping. I'm not going to get into the whole detail of what the definition is, what the OFCCP says about it. Basically, what you're trying to do is group people together who are similarly situated. They have similar levels of responsibility within the organization. They perform similar functions. Their jobs require similar skills and abilities. It's basically constructing a group of proper comparators. And a lot of times, the construction of similarly situated groupings isn't really done correctly. There's too many people. There are people with different levels of responsibility, different functions. Sometimes there's not enough people. You really parse it down into groupings of maybe 1 or 2 or 3 people. That really doesn't work from an analysis perspective. So similarly situated employee groupings is really a key issue when you're looking at your compensation data for internal equity. And that's one of the biggest pitfalls, is how those groups are constructed. You want to construct them carefully. You want to think about it, because however you construct those groupings, that's going to serve as a memorialization of your view of the workforce. So you need to be prepared to live with it. The other common data pitfall that I often see is when people do their own internal comp analyses, they have a misspecified compensation model. And what that means is they're looking at, for instance, average pay rates by gender. And they find out that men are paid a lot more than women. So do we have a gender equity problem? Are we discriminating against females? Maybe. Or maybe it's the fact that there are other things contributing to compensation that you haven't measured. Seniority, time and grade, all of those other determinants of compensation. To correctly model the compensation process, those pieces of information have to be incorporated. You have to include all the explanatory factors. So if you look at just the averages by gender, by age, by race, that's probably not going to give you a true picture of what's going on. So you really need to think about how your compensation is determined and make sure that the model that you use, if you're doing internal analyses, matches the way that people are really paid.
And one of the things that I find that is a real data pitfall for companies are using consistent job titles. And so what do I mean by that? Spelling senior, so you have like a senior engineer, senior spelled S-R period, S-R, S-E-N-I-O-R, and then all of them are the same. And so that makes it really hard when you're kind of reviewing data to find those people, like Stephanie was saying, similarly situated employee groups. So the base of that is having consistent job titles. Also, when it comes to levels, discuss with my clients, so there's a very broad job title of engineer. And I find that some of those engineers may be electrical engineers or mechanical engineers. And so what becomes important is there different types of engineers? So we may have to adjust the job titles a little bit from perspective so that we can account for those different census codes or possibly different affirmative action job groups, that type of thing. And also this consistent job titling, a lot of this gets fixed when you have a compensation plan because you have set job titles, but those are some of the issues that you find with job titles when you're looking at your AAP data.
Now, as we've said in each of the webinars in this series, if you have bad data, that's going to lead to a bad affirmative action plan. The statistics are only as good as the data that generate them. And if you have missing data, if you have bad data, if you have inaccurate data, that's going to lead to inaccurate conclusions. And it's going to make it difficult for you to identify where your real issues are. We've talked about this a lot before. It can make it look as though you have issues that don't really exist. They can mask issues that really are there and need to be addressed. So bad data leads to a bad AAP. It's going to give you inaccurate conclusions, and you're not going to know where your real issues are. You're not going to be able to focus your efforts on the things that really need to be addressed and improved.
And I would say for compensation more than anything else, we've said the same thing, that you're hiding issues, don't start making adjustments. But for compensation, we are talking about real money. This is people's pay. So if you're finding that you have bad data, before you start making pay adjustments, conclusions based on this data, focus on cleaning your data and getting good data versus trying to make some conclusions or making pay adjustments or changes based on this inaccurate data.
And again, the time, the expense, and the internal and external resources that are involved in cleaning up this data, it's really the most efficient and cost-effective way is to make sure that your data is clean, that you're keeping it contemporaneously, that it's updated. We've talked at length about the internal costs and the external costs. It's really easier to keep correct and comprehensive data on an ongoing basis. And particularly with respect to compensation, just to tie back into what Carla mentioned about adjustments, think of what would happen if you had missing data or inaccurate data and you went ahead and you made those pay changes. And the pay changes weren't really justified, they weren't really necessary. Now, you're not only spending the extra money to increase the pay rates that didn't need to be increased, you've created a potential discriminatory situation. You're now going to have to spend more money to bring the rest of the pay rates up to where they should be relative to the increases that you made that weren't really necessary. So, all of these things, the internal costs, the external costs, the resources, with compensation, they're exactly the same issues as we've talked about with the other 5 webinars. But when it comes to compensation, things get even more complicated. Compensation is probably the most difficult area of all of the 5 areas that we've discussed so far. So it's really important to have good, clean data. If you try to go back and repair this stuff, or if you have to repair historical information, it's going to be really, really difficult. So make sure that you're keeping historical information, make sure that it's updated, Make sure that you're creating all this documentation contemporaneously. It's going to save you a lot of headache in the long run.
You know, and so it's clean and accurate data, and as much as possible, start getting it into your system. That's really going to save you some time and expense. In addition, resources in the event of an audit. Because remember, you have 30 days to respond once you get the scheduling letter, and then after that, the OFCCP has very short time frames when they want you to turn around information. Some of those expanded information like time and job, time and grade, certifications, degrees. And if you have to go back and do all of that by hand, essentially your staff is dropping everything for that period of time to respond to that. So getting it in your system and accurate is extremely important.
So when it comes to audit and litigation issues, compensation and gender pay equity in particular is really a top priority right now. And it's going to continue to be a top priority and a hot spot in the coming months. There's a lot of emphasis right now on gender pay equity. The OFCCP is interested in it. The EEOC is interested in it. There's a new enforcement task force, the National Equal Pay Enforcement Task Force, that President Obama created to crack down on wage discrimination. As I mentioned, we've got the Ledbetter Fair Pay Act that changes some of the rules about filing a compensation discrimination claim. We've got the Paycheck Fairness Act that's been reintroduced. That's a whole separate webinar in and of itself. But there's a lot of movement right now in the regulatory and employment practices communities about compensation and gender pay equity in particular. So compensation is definitely a hot spot. It's going to continue to be on the top of all the regulatory agencies' agendas. And from a private litigation perspective, we're beginning to see a lot of class action litigation about compensation discrimination. Think about the Dukes versus Walmart case. Class actions are very, very dangerous for employers. They present a huge exposure. There's huge liability there. If you don't have the proper data to be able to defend and justify your compensation decisions, a class action lawsuit can be absolutely catastrophic. So everything we've said before about the hiring, promotions, terminations, all of those things still hold for compensation. But again, compensation really is complex. It's a priority issue, and the dangers of class action litigation and regulatory investigations are very real right now in terms of compensation. It's something that everybody's watching, and it's going to continue to be on the radar probably for the next 12 to 24 months.
You know, and OFCCP is really making some traction on that, and that's evidenced by, you know, the new proposed scheduling letter. You know, prior, our current one, you submitted data, you know, by grouping, by job title, by, you know, SSEG, by, you know, essentially whatever you wanted. And now they would have to go and ask you for the individual data after the fact. But now, when the new scheduling letter goes into effect, it could be that we are sending individual data from the beginning. So they are, compensation is a focus for them. They're making traction on it. They're trying to make more traction on it. So be ready for that. So data scrubbing and validation. We've talked about what are the different pieces of information, where are some missing points that we've seen, where are the data pitfalls. So now we're really going to talk about, once you have all that stuff in your file, cleaned up, ready to go, how do we start doing some data scrubbing and validation to make sure that we have all of the things that we need to have. So first question you should ask yourself when you are reviewing the data is, do you have the right people? And this is really going to be very similar to the workforce snapshot analysis that we did in terms of comp data, because from an AAP perspective and what you're going to submit to the OFCCP, that's really the base report that you're going to use for analyzing your comp data. A couple of interesting points to make before I go into the data scrubbing is under the current scheduling letter, you provide the compensation data coinciding with your plan date. Under the new proposed scheduling letter, the comp data will be provided as of February 1st. So it's kind of an interesting little twist. They did that for tax purposes I figured that everyone would be done with the sending all of their W-2 stuff out by the end of January. So kind of an interesting little piece of information there. Where before it matched up, it probably, there are very few people who have February 1st AAP plan start dates. So let's talk about what were the analysis that we do to validate for the workforce snapshot. We did the year-over-year analysis. So once you have made sure that you have everyone in the hires and terms logs, and you kind of go back through and look at those webinars, check to make sure that none of the termed employees are on the roster unless they were rehired. Check to make sure everyone on the hire log is on the roster unless they were termed, that kind of thing. So a lot of those same analysis that we have done with the other reports, it's the same here because we're using the same report. Do we have the right codes? By job title, compare last year's code, EEO1, AA job group census code, that kind of thing. So again, I do that by job title because that's typically how you assign all of your codes, EEO1, AA job group code, census, also FLSA status, that type of thing. Check that everyone that with a 1.1 or 1.2 EEO code is in the manager column. Validate your full-time, part-time employment status. Check that everyone in the manager-supervisor column is coded as a manager. Again, these are really the same things that we talked about with the workforce snapshot. Apply them to your compensation data so that you know that you have the correct, for each of your employees, that you have the correct job titles, you have the correct EEO, AA job group codes, you have everybody in there from last year that was hired, you don't have anybody on your roster that was termed, and that's especially important if you're doing this manually versus out of an HRIS system.
And once we're sure that we have the right people and we've got the right codes, the next question to ask is, are we consistent? And like I've said before, consistency really is a two-pronged question here. Do we have consistent data? Are we reporting pay rates in terms of hourly rates or annual salaries within each employee grouping or within each job title? Are we using consistent currency if we have multinational situations? Are we reporting some people in dollars and some people in yen? You want to make sure that you have consistent reporting in the same currency, in the same unit of pay. You also want to make sure that you have a consistent set of information for all employees within a given grouping. So you really, even though you're providing this data or you're preparing this data on the person level, you really want to keep in mind how these employees are grouped. As I mentioned before, some certifications, some licenses are important for compensation for a particular job, and they have no importance whatsoever for a different job. You want to be sure that anything that goes into determining that person's pay is reported, and that it's reported consistently for all of that person's comparators, all of those people who are similarly situated. You also want to look at consistency from an internal equity perspective. Are we treating employees the same way? Are we offering red circling opportunities? Are we offering raises and promotional increases consistently? Do we have a set of policies that we're following consistently in terms of raises, promotions, pay changes, etc.? The next thing is to look at your data for gaps. So the idea here is there's two different kinds of gaps. There's what I call the one-off or the random gap versus the systemic gap. And looking at whether your gaps are random or systemic really can help you identify any shortcomings in your processes and procedures for capturing this information. If certain employees are missing the same kinds of information, then that's a signal that there's something deficient in your data capture process. If it's just one person missing something here and another person missing something there, that's not necessarily indicative of a systemic problem. It may be that you just don't have that particular piece of information for that particular person. But taking a look at your data gaps when you're going through this process can really prevent problems in the future. If you identify and solve those gaps this year, chances are you won't have to worry about it next year. The other thing to keep in mind when we're talking about gaps is gaps in policies and procedures. And again, I mean, this applies to all the different kinds of decisions that we've talked about so far, but it's really important for compensation. Are there gaps in our policies and procedures? Do we have gaps in our documentation? Do we have complete historical information in terms of policies and procedures? So looking at your gaps and filling in those gaps now really goes a long way to making the process easier in the next year that you do your plan or in the event of an investigation or litigation.
Before we move on to the next slide, there was a question asked, and it kind of goes back to our previous slide, saying that, you know, a lot of companies don't pull data as of February 1st. And someone was thinking about maybe pulling it on February 1st so that you don't have to pull the comp data at a separate point in time, because then you're really pulling kind of your roster for, or your workforce snapshot for your AAP, whatever date that may be, and then having to pull it for February. If you have the flexibility to do that, I don't see any harm in it. Would I suggest it? You know, at this point, I don't know. It really partially depends on why you have your plan date the way you do, and I'll give you some examples. A lot of people have their plan dates as of January 1st. One, because it's really easy to help explain. You know that it's a calendar year AAP. You know you're pulling your employment transactions as of January 1st, December 31st. It's very easy to remember. So it's kind of just an ease of process perspective. And so do you want to change that ease of process just because of this February 1st thing with your compensation? Maybe, maybe not if it's not that big of a deal. Another way companies have it set up is if you don't have your fiscal year set up as of a calendar year, then they set up their AAPs based on a fiscal year. Again, you have them set up that way for a reason, to help you because your AAPs match the way you run your business. So I'm not really sure it would be worth it to change it as of February 1st. February 1st is typically a pretty bad time for people to do AAPs because there could be a lot going on. So you could be in the middle of performance evaluations if you do those at the beginning of the year, or if you do them at the very end of the year, you could still be finishing them up, reviewing them to make pay changes. So there are a lot of reasons why people have their AAPs set at a certain date. If you have that flexibility, and from a work perspective or a business perspective, it doesn't matter. I don't see any harm in it, but I wouldn't change it just because they want comp data as of February 1st.
So the key thing to keep in mind with data scrubbing and validation is that it's really an interactive process, and the company and the consultant are going to work together in order to get the most correct, comprehensive, and accurate data set as possible before any kind of analysis is done. And part of this interactive process, I'll go back to clients with questions if I see things like unusually wide spreads in pay rates within a particular grouping or a similarly situated employee grouping. If most of the people are earning somewhere around $50,000 to $55,000, and I have a person who's earning $20,000 or a person who's earning $200,000, that's a signal that maybe that person is in the wrong group. Maybe there's data error. So unusually wide spreads in pay rates can be a signal that something is going on. I also look for salary rates that are equivalent to less than minimum wage. Hopefully nobody's paying their employees below minimum wage, so we always do that quick little check. You just take the hourly or the salary rate, you divide by 2,080 hours to get an annual rate. If it's less than minimum wage, you can expect a question from me as to, what's going on with this person? Are they part-time? What's the situation? The other thing I look for is an hourly rate equivalent to six-figure earnings that seems to be out of line with the rest of the grouping. If you're paying somebody an hourly rate of $20,000, that's probably data error. If you're paying somebody $250 an hour, it might be a real number, or it might be data error, depending on the particular job title and what the other pay rates within that grouping look like. So salary rates or hourly rates that are out of line with the rest of the group, you can expect that we're going to come back and ask you questions about those. Are these correct? What's the explanation? What's the story? With respect to non-exempt employees, one of the things that I also look for are excessive overtime earnings and overtime hours, or non-existent overtime earnings and overtime hours. Again, it's a process of judging each person relative to what we're seeing in the group. If everybody in the particular SSEG has overtime earnings and this particular individual doesn't, that's a signal that maybe we're missing that information or maybe there's something going on. If nobody has any overtime hours or earnings except for one or two people, that's also going to lead me to question, is this the proper pay that they actually received? Is it properly accounted for? Why are these people getting overtime when the other people aren't? So we're going to look through these kinds of things. We're going to look at spreads. We're going to look at equivalency rates. And any kind of unusual pattern that we're seeing, we're going to come back to you and ask you about it. It could be that it's correct, and we just need a justification or a reassurance that, yes, that is the correct hourly rate. Or you might investigate that situation and find out, we have data error. It really should have been recorded as straight time, not overtime, or we've got an equivalency issue. But it really is an interactive process back and forth between the client and your consultant.
And, we've said this in previous webinars, be ready for the questions. There isn't an AAP or an audit prep that I go through that I don't ask questions when it comes to compensation. This is very confidential information. Not just the information in terms of the data, but also the conclusions that you are making. So again, I want to reiterate the attorney-client privilege. Try and keep it as confidential as possible. Don't go outside of the circle of that attorney-client privilege. So again, it's very important, not just the data, but the conclusions that come from it.
And to wrap up, compensation in general and gender pay equity in particular is really in the spotlight right now for the OFCCP, for the Department of Labor, for the EEOC, for private litigation, regulatory investigations. Compensation really, really is the focus right now. There's a lot of proposed changes in compensation legislation. Some of those pieces of legislation have already been enacted, but there's a lot more that's been proposed. The Paycheck Fairness Act, as I mentioned, has been reintroduced. That really has the potential to revolutionize the way people pay employees. It's too detailed to get into here, but it really could be a game changer. Additionally, the OFCCP is proposing the rescission of the compensation standards and guidelines. Now, the compensation standards and guidelines basically outline the methodology that the OFCCP would use when conducting their compensation analyses. And the guidelines laid out a plan that contractors could use to basically self-audit their data. It was a good plan. It was a very common sense, empirically sound protocol. They're proposing to rescind both the compensation standards and the guidelines. And basically what that means is if those guidelines are rescinded, if the standards are rescinded, we're not really going to know what the OFCCP is doing in terms of analysis methodology. The only thing we do know is that they say they're going to rely on broad Title VII principles. Nobody really knows what that means. So a lot of the proposed changes in compensation legislation right now could be game-changing. So it's important to get control of your compensation processes now. Use your affirmative action plan as an opportunity to take control of your compensation processes, of your compensation documentation, and really know what story your compensation data will tell. It's really important to understand what your data is going to show. Again, if you just look at averages, you may see that there's a big disparity between whites and non-whites or between males and females. You have to know that your story is going to be that disparity when you look on it at the surface. You also have to know that when you account for those other factors that determine compensation, the story changes. But there's going to be a lot of movement in the next year to 2 years on compensation. So I really urge you to use the Affirmative Action Plan as an opportunity to take control of your compensation and really look at your data, examine your data, dig into it, and know what story your data is going to tell before you produce it.
This is a really scary time for federal contractors in terms of how OFCCP is going to be analyzing data. You know, like Stephanie said, there were the compensation guidelines and standards. We knew the trigger test or the tipping point test, and now there are these, you know, this 2 and 2, and there's the, you know, Title VII principles, and we kind of feel like we're out there and we don't know how they're going to analyze it. But the one thing that you can take control of, like Stephanie said, is your data and your process. Consistently applying the principles and standards that you have already created and the documentation that you have in terms of the business reasons why you pay people the way that you do. And that's the way you're going to prepare for whatever change the OFCCP, other regulatory agencies, or litigation comes forward. So I want to stop and thank everybody for attending today's webinar. On this last slide, we have both of our information up there, our email address, our website address. Both of those websites address have archived webinars on there, other articles, newsletters, ebooks, things like that, full of information on topics from statistics, econometrics, AAP, all of those types of things, a lot of compensation stuff on Stephanie's website. So, you know, take advantage of and use that free information. Just want to thank everybody for their time, and I hope to see all of you in this second series.
Thanks, everybody.